Good morning, good afternoon, good evening, based on where you are. Welcome back to another episode of the weekly market update with Irfan Khan and Joseph DiVirgilio.
Thank you. Thank you. Of course, we're just joking here. What investors must know this week? We always
There's
start.
lots to know. They need to know lots of things this week, don't they?
Actually, on the political front, there's a lot of stuff. On the financial stuff, not so much. But we're going to get through all that. What happened last week? What's going to happen this week? This coming week. But before we do that, we're going to start with what we always do, which is the statistic of the week. Get fun. You go ahead.
Yeah, this statistic of the week is called the hidden underperformers. So what we mean by that is that in a structural filter of 5,636 public companies, only 2.9% passed basic fundamental tests for steady profit, debt control, and business modes.
Imagine
What
that.
do you mean by that?
Well, imagine that really only 2.9% of the companies that were in this study, so of 5,636, were investable companies that you could say, okay, these companies are going to do great. These companies are going to grow. These companies are safer for me to invest in than the rest of the stocks that were the companies that were actually evaluated. So that's really scary because a lot of people buy into companies that are low quality because they think that who knows what's going to happen. And we've seen these statistics in the past where only a very small percentage of companies actually do perform and do become outliers in the stock market. A lot of them fail. So in this case, this study just really says 2.9% of the companies out of 5,636 are worthy of your money in the end. So that's
So Joseph, basically, we're talking about 150 companies, more or less.
yeah.
And are these all in as far as you remember,
I don't know. I
Fortune
don't.
500,
I
S&P 500, or the Russell 2000, or?
no. So 5,636 companies will not be in the S&P 500 because, of course, S&P 500 is only 500.
No, I mean the 150.
Yeah, I don't remember that. I don't know that, but I would assume that this has to do with probably a mixture of companies on the New York Stock Exchange and the Nasdaq. The Nasdaq has, I think, like today, over 14, 15,000 companies they're listed on the Nasdaq, while the New York Stock Exchange is around 5, 6, maybe 7,000. Well, they were, I would say 5, 6,000. So it's got to be a mixture of those two. That's my feeling. I am not too sure about the study itself. I just pulled this out because it was interesting to see. And I'm assuming again, I'm assuming this has to do with a good blend of the two. Yeah. Not Russell 2000 because Russell 2000 is small caps, and so they say small caps big gains but big pains, and so you don't want to really. Small caps are companies that are a lot more riskier because you don't know what's going to happen with them, and they're really sensitive to what goes on domestically, and usually they do very well with a strong dollar, but as you can see, a long term trend of the dollar has been really depreciating for the past 30 years and. But so yeah, I think it's good. This is a mixture of Nasdaq and S&P. That's my take.
Got it.
Yeah. So equity market recap for the week ending July 24th, 2026. I'm just going to read off my notes. Global equity markets closed lower, marked by extreme volatility due to rising Middle East conflicts, big tech capital expenditure anxiety, and sweeping new trade tariffs. The Nasdaq was down 2.10% for the week. The S&P 500 was down 1.1% for the week. The Dow Jones down 0.77 for the week. And Stock 600. Wait a minute. Did the Stock 600? I didn't update that. So disregard that. I don't think it was down 0.4%, but it was actually slightly higher. But anyways. So key market drivers: AI spending fatigue. Now this is interesting because we had Alphabet, which is the parent of Google, great earnings, emphasized continuous capital expenditure on the AI front, and that kind of scared markets again. They also said, of course, we're going to have weaker cash flow tied to artificial intelligence platforms moving forward in the short term, but obviously we don't want to continue. We want to continue spending on this, and And investors, like I've said many times, investors really, want to see money yesterday and not tomorrow, and they're very short-sighted. And it's really the way the market has been structured for the past decades. Companies need to reinvent themselves every quarter because they have to beat earnings. So,
Yeah.
and to me, it's really there was one thing. It's one thing that Trump floated out months back was the fact that what are you doing there?
I was putting a bit more light because it was getting a little dark. I noticed that. Otherwise, for my audience, it would be hard. Not that we want to watch my face, but still.
Trump floated the idea that he wanted to revisit this quarterly earnings thing, and I agree with that to a certain degree because CEOs are pressured on a quarterly basis to beat earnings, and they're really not focused on the long-term objective of a company, but focused on three months. Every fucking 3 months, they've got to beat their quarterly earnings or whatever numbers that analysts have set for the company. And to me, it's really detrimental to investors' long-term view. But all right, well, anyways, so the Middle East oil volatility. Now we had a bunch of shit happen again with Iran and the United States. They were throwing each other bombs, and Brent was up $100 a barrel again. So the oil retraced slightly by Friday to 96.78 amid potential China-backed mediation rumors. The energy spike fanned aggressive inflation and hawkish Fed rate hike fears. So So now, basically, this is what's going on. We talked about this last week, where Trump was, inflation numbers better than expected. We're doing our job, whatever the fuck he said. But that was really just, a reflection of the fact that it was a ceasefire where oil came down from 110 to high 80s, 70s and low 80s. And then now oil is back up again. And so those numbers, those inflation numbers again, that the new print is going to show a spike up again. And it's, so I would say to the administration, stop, singing victory every fucking time you have a print, because it's not, it does not reflect the reality. So tariff policies. Now the Trump administration acted attempt to 12.5% global labor tariff. I mean, there's like forced labor countries who have forced labor are going to be, slapped with more tariffs. I don't know how that's going to hold in. I mean, 50% on Canada, and
Canada has forced labor in place.
I fucking know what this fucking guy, who knows what the fuck, this guy's just coming up with, I don't know if he's, taking shit out of his own diaper. I'm not sure what's going on here, but truth of the matter is, okay. So anyway,
I heard that Air Canada was considering potentially buying some long-haul aircraft, Boeings, and then that is ultimately at the recent Farnborough Air Show in England, they decided to then opt for Airbuses. They said, well, no, hang on, you're slapping these tariffs on us. Forget that order. We're going to go for Airbus.
Same as with Ryanair. Ryanair has put on hold a bunch of, I think it was 200 aircraft, 737 aircraft, Boeing aircraft. So fresh proposed duties targeting Canadian goods added suddenly localized supply chain uncertainty. Even hockey sticks, imagine that. That's on the list. Hockey sticks on the list. It's just ridiculous. And, and I'm going to say this again, and I've said it a million times. Had I been Trump, after realizing what tariffs do to affordability in the United States, once the first batch of tariffs of Liberation Day last year in 2025 was announced in April, and the Supreme Court did strike them down, I would have just put my tail between my legs, shut up, walked away silently, and not bring this fucking thing up again. But he's so stupid, or either he doesn't really give a shit about the well-being of Americans, that every single opportunity he has, here are tariffs again.
It makes no sense, right? There's just no logic to it. There's nobody gains from this.
Oh, the countries are going to pay for tariffs. Of course, that's been debunked by every fucking cat on the street knows that if you impose tariffs, who's going to pay more for it? Are the consumers of the country who's importing those goods. So if he's doing this every single time he has an opportunity, either doesn't give a shit about the well-being of Americans and the affordability crisis that there is in the United States right now, who is just completely illiterate and surrounded by idiots who would just say, yes, this is whatever you say is good, sir. So I don't know, but nevertheless. Also, one other thing that really hit the markets was the semiconductor index, the Philadelphia Semiconductor Index, which was down 20% off its June highs. When that's been pressuring markets down. Also, the fact that we had bond yields and mainly the 10-year bond yield kissing 5%. That's not good. It's basically saying that investors worldwide are expecting higher yields from American bonds or treasury bonds, and that basically really saying, look, we don't like what the fuck you're doing. We don't believe that what you're doing long term is good. We don't know that you're going to be able to pay us. So we want 5%, and we don't accept anything lower. So that's really undermining trust in the American government or the full faith of the and credit of the United States government, and that's really scary. So whatever this country, whatever this government is doing, to this country, is just the opposite of what should be happening. So the world doesn't have any more confidence in the United States. The Middle East there's a risk of a broadening conflict, and they're really doing this on their own. Look, I think there was was it Kuwait and the UAE that started bombing Iran over the weekend on their own with missiles. And the thing is, America is no longer the power that it used to be, and they know it. And look, it was Pete Hegseth, this fucking Secretary of War wannabe, who was set down in front of Congress seeking for another $60 to $70 billion because I
saw some of those videos, some of those exchanges.
They're running out of missiles, and for what? A war that nobody wanted. Again, goes back to a distraction from the Epstein files, and because Netanyahu needs this war because it's his agenda from 30, 40 years ago. So America is no longer that safety net, that country that people rely on, that the other countries rely on for law and order in the world. A president who's enriched himself to the tune of $3 billion by stealing money from his own base, by selling meme shit coins. How could you possibly trust anybody like this to put order in the world when he fucks his own supporters? I mean, it's just as simple as that, anyways. And then, just at this, I forgot if it was at the, was it at the correspondence dinner or some other event where he said this week that he was announcing a run for a third term. The guy,
it was
fourth term because he actually won the third term. He said this guy's still talking about bullshit that he
was wearing a 2028 cap.
Fucking guy. Anybody who goes along with this shit, they're fucking idiots. The guy still continues to bring up a lost election, the 2020 election, and he still has these grievances that he lost the fucking election. Every court said so. Just shut the fuck up. You won again now. Just make the best out of your fucking term. And he's not. He's doing everything but. But listen,
take a chill pill, Joseph. Relax, breathe.
Look, it's just so frustrating to see, a 250-year experiment, the United States of America, just being trashed by some fucking orange clown pedophile buffoon. I don't know. To me, it's just really. Anyways, stock of the week, guys. Okay, Nomad Foods. Nomad, NOMD is the ticker. That's November Oscar Mike Delta. Nomad Foods. Don't take this as an investment advice. This is a stock that I like. This is a stock that Irfan and I have in our portfolio, and we discuss what we like. You want to follow what we do, you first speak to your financial advisor because by no means this is any investment advice. So Nomad Foods is in Europe they're known as Findus. In the United States we know them as Bird's Eye. They do a lot of these frozen foods, comfort foods, and one of the things that they do that actually helps their business is they do store brand foods too. So when you go to a store, say I don't know, Walmart, and you see Bird's Eye frozen chicken wings or whatever, and then you see a Walmart brand, chances are they make that too. So given what's going on around the world where, prices of energy is going up, gasoline is going up, and people are being squeezed of their well-being, they might be more inclined to buying cheaper foods and frozen foods as opposed to, more fresh produce and so forth. And I think, and not only that, the fact that the stock had bottomed to about $11 from 20 about a year or so ago. I see it as
so this is part of the category of so-called defensive stocks.
Correct. It is part of the consumer staples, and it's been destroyed because obviously, AI, people sell defensive stocks to buy aggressive growth companies. And so in this particular case, Nomad Foods was one of the stocks it's one of the stocks that is part of the defensive sector, like I said, consumer staples, and is one of the most undervalued within the sector. And I think the niche market they're in, because they're mainly frozen foods where people can afford them more than fresh foods. I think the stock has a really good chance of doing really well. And, so from here, I see it at 17, 18 by the end of the year.
But
So
would you see this as a sort of a opportunistic investment as long as there's this level of uncertainty from economic and political standpoint?
I see it as an opportunity to put yourself into a company that it's part of a sector that's defensive, and a company that is overvalued. It's undervalued, and it's very well run. So I remember actually, my friend Bill Ackman actually had bought this stock years back, and he had a big position, and he sold, I think, in 2018, I want to say 17 or 18. But nevertheless, it's a really good company. It's well run, and again, it's a defensive stock. If the shit should hit the fan even further, and what's going on right now geopolitically, this stock is poised to do well with utilities and the rest of the defensive sectors like healthcare as well. So then again, I want to just make sure everybody understands this is not financial advice. This is what my thinking is. Company's numbers look very good, and I bought some. So that's my portfolio. I mean, that's one stock of my portfolio.
Very well then. Very well then. Okay. Well, as always, folks, please, if you are enjoying what you're hearing, what you're watching, like, subscribe, share, comment. All of these things cumulatively
Help us grow,
increase our reach, and grow, definitely.
Absolutely correct.
So we hope you're finding at least some value in what is being shared on a weekly basis. We've done it in a format which we think is not going to take too much of your time. So 20 minutes, half an hour at the very most in some situations, but not beyond that. So
just want to give a little bit of wisdom for next week. There's been a ceasefire, at least for now, starting yesterday, Saturday into Sunday, with regards to the United States and Iran. So hopefully there's going to be a rebound in the stock market sometime this week. And that has to do with the fact that we talked about this last week, where strategic oil reserves in the United States and around the world have been depleted, and nobody can afford to continue a war like this, because inevitably in the United States, gasoline is going to hit $8 a gallon if things don't get resolved, because there's no more strategic oil reserves to unleash on the market to keep.
Well, one could say, well, we can just go get it from Venezuela, right? Because
no, it's too expensive to process and to refine. It's like so thick and it's so dirty. Nah. Anyways, yes, please comment, like, share, and tell us what you want us to talk about. Thank you for listening, and we'll see each other next week.
Great one. Take care, everyone. Bye-bye.
Bye.